Welcome to the weekly crypto webinar. If you're new, we go through tradition of GBTC, Bitcoin, or I should say Bitcoin, Ether, Bitcoin pair, GBTC, and then BIDO. That's the typical order. I go through the weekly charts, which are on the weekly altcoin and crypto equity report, usually put out Wednesday or Thursday. And we hit requests. And again, as I always say every week, if you have a request and you haven't put it in the thread, it's now too late. I take that off at 7:30 a.m. and I put it out on the Friday before. But have no fear, because you can put your requests in the request system on Elliott Wave Trader or the channel on Seeking Alpha. And I don't mind covering it while I'll doing quick analysis while I am in the process of getting the video processed and the charts up. So I'd cover it then, no problem, but I just will not cover it on the webinar, because if I always leave that door open, people throw stuff at me the whole darn time and we never get to Q&A. Other housekeeping coming up, again, next week, Thursday, Friday, I am not on the board. Note as well that Jason is off Friday afternoon, so we will not have coverage for a few hours. It's Friday though. I think you guys know that nothing happens on Friday. Of course, maybe the catch 22, or what's the word? I don't know. There's a phrase for it, but maybe it happens this time because we're gonna be gone. But I am going to plan on a webinar, but it's a little bit wait and see, because someone has to transport my sister and family back to the airport right about the time of the webinar. I think we got that worked out. I will clarify that later in the week. But yeah, if I haven't said anything, my sister is coming into town with her family for a couple of days. So I will do a show and tell of the greater Seattle area. Probably take a trip up to Rainier. Should be good. See, is there any? Oh, and then of course there is a members meetup in Los Angeles on July 30th, which I will be. I think Jason's going to be there too as well, I believe. And both services are welcome. This is not an Elliott Wave Trader thing. It's a greater Elliott Wave Trader family, so Seeking Alpha people are welcome as well. If you need the address, I will remind as we get closer. It's on Wilshire Boulevard, a few blocks from the La Brea Tar Pits. It's a great spot. I think I have been to 2 or 3 members meetups. It's on top of the roof. If we get great weather, it is absolutely gorgeous. View of Los Angeles and the hills. We cover drinks and some finger food. Honestly, there's enough food typically that I don't need dinner, but we have a staff dinner afterwards anyway. It doesn't matter. I got to eat and eat and eat, but you guys should be able to enjoy. Save room in your belly if you want to enjoy that food. It's going to be good. I think the members meetings are one of the favorite parts of the job, to be honest, because I'm kind of a flaming extrovert. So I like to talk with people. So I'm looking forward to it. And I will love being back in LA for sure. All right, let's talk about the markets. I mean, by and large, we've got kind of boring market, but we've been developing our range trading strategy, or at least I've been developing it and trying to share. So we'll get to that, but as usual, we go through this chart first, which we are ideally climbing towards 125K finally. I just want to warn that we are structured as an ABC. When I zoom back out, I've said this in the past webinars, this should not be a surprise to anyone. I can argue that we triangle out even more than a year, maybe into halving or whatever before we get that 125K. But those are hard to predict from here. Triangles cannot be predicted when you're in the A and B of it. So I'm just saying it's a possibility. It's definitely not a preference. I want us to get there. But I think it is a little bit funny that it seems like we're about the halving is happening. Maybe that we get the last push once the halving happens. I don't know. Usually that halving has a lot more legs in it, or pushes price a lot more. But I don't expect much more than a high end of this would be 188K. That'd be extended. I mean, that's being fabulous, right? But it's not typical to extend to that level of fibs. Bitcoin used to in its past, but it does less of these overextended fibs like it has in its early days. So I do expect it to be limited somewhere near 125, can be 130, whatever, but in that region. As we zoom in, I mean, we just have a forever wave 4 range. Just to remind, below 29K, I would have to call this a very anemic fifth wave. It's very hard for me to trust that as a fifth wave. I would much rather see a move to 31,800 at least. That's a little bit on the low end, and it's me using this lowest third. It is possible that the third is this extended high, and that would be a little bit closer to 33. I will not count us in the third wave unless we break over 33,850, 858. That magical 786 extension is where we need to trust that it is in this third already, but I don't see enough waves to suggest that will happen. Sometimes it surprises when I don't see enough waves, but it is not the case. But anyway, we are in this forever four. I mean, it's really long. Fourth in proportion to two, right? I mean, fours are usually longer than the two in time, but this is insane. That said, as I've suggested, we can make a lot of money range trading this. It's sort of ridiculous. I like to do that because it builds a larger position. By the time I get out to the two, I've got a larger position. There's always a risk as you're taking profit into the higher end of the range, you end up busting out over in the situation 33,850. But I still love it as a tactic. Again, I like to be long the range because I classically as a trader have been always waiting for those swing trades. It seems as we go along and Bitcoin gains more maturity, we see a lot more of these range trades. So I certainly want to get better at it. How do you trade the ranges? Just keep mindset of levels below. 26,200 is what you can use. Honestly, I'm giving my, I'm just going to be buying down to 21.3 if this 1-2 breaks, which it can, as this B wave here into the C wave here. But I'm going to be ranged and buying. Honestly, keep buying if we drop because I love cheap Bitcoin. But I'm just saying the range trade can be given room all the way down to 21.3 comfortably. If you want to play a little tighter, 26.2, and as you're dropping, you buy. You just be conscious of your cash position so that you can buy lower, and then you take profit off of it as it pops back up. And turn on a grid machine if you want from 3commas.io. Again, not a recommendation. Read up on the past hack. Read up on how you do it, and make sure you do it right. But it's a little bit of a good way to make I think it's making lemonade out of lemons, honestly, because I'd rather just get the swing trade on and going. But honestly, it is a way to maximize your position size for the swing trade once it's going. So it's not all bad. So I mean, just scale in, scale out, scale in, scale out. And if you were doing that, you've got a lot of trades in here. I was mostly doing it in Ether and had some pretty good trades out of it for sure. Not big money, not huge like when you just ride a 3x up, but does definitely give you a bit better position for when that 2 finally bottoms and you're in the third, you're sized up because you had all this profit along the way. So again, not a lot of profit, but some. So that's the gist of this. So we are, I get a projection of 54.87 out of these all 5 waves. Things may adapt, but so far it seems pretty stable. And we zoom out, that should get us to the A wave, and then we'll see if this B wave holds. That'll be a real test for it. Granted, we're all in halving season, so I'm surprised if some support, major support breaks. I mean, right now the most major support we have right now is 18, and I'm bullish above 18. So if it drops that low, it's simply a twist and turn. But right now it's having a struggle to even get to 29. So why even talk about 18 at this point in time? We're just in such a tight range, which is very, very, very constructive and should push us higher. I'm finally starting to see some people out in the podcast space talk about this being in a bull market. I mean, I'm finally starting to see it. I mean, even into this third wave top here, I had consistently heard about this as being a fake rally, blah, 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 blah. Finally, people are starting to talk about it. That's not a bad thing for them to start talking about it, but by and large, I don't think in mass people are very FOMO'd yet, and they probably will not be for some time. They've even forgotten about the halving cycles. I mean, people always talk about the halving cycles, and I think the market has literally got them stop talking about it because people have been so disappointed. So I think sentiment is in a good spot, starting to climb up, but not crazy. But that's very qualitative, and we have to follow price levels. Elliott Wave helps us with sentiment by showing us price levels where things tend to turn up, turn down. So it's getting interesting to me, but at the same time, very boring until we break loose. That said, there's plenty of money to make even when it's boring. Ether, let's get out to the daily. As I've said, this chart's like slightly more bullish because we've got more higher highs out of this. I have a lot of questions about how this gets its way to 10.5. Is a triangle possible in this? Yes, it is. Triangle is possible here as well, but although it would probably would not start to indicate a V wave top unless it got into like 3,600 to 4,000. So we have some runway here, and but yeah, it's sloppy, but poised a little more bullishly than Bitcoin with all of these higher lows. Zooming in, I really think this was a little bit low for a fourth. If it breaks again, it likely will. I'm going to be in this kind of state of, was that a fourth or was that a second? And are we still in the fourth, or is this a low second? It probably won't give me any confirmation until we break out over 21.9, which is where the third kicks off. But it did get higher and stronger than Bitcoin on this alternate wave one, so I have to consider it. And I do in both Bitcoin and Ether for now look like they will give us a lower low unless they're forming a leading diagonal off this low, because it's very corrective off of the recent low. I even have this marked 4, right? But I don't. That's only because that's sort of the last chance for me to trust 4. It's not because I'm expecting it to hold, because I really don't see the nanostructure suggesting that it will. Again, trading the range is great. 16.99 is the tighter stop. I forget where. 1400 was my lower stop. I've gotten rid of the bigger blue box just to clean things up, but 1400 is where the lower. So I would generally be giving room for that. I don't think we'll get there right now. Looks to me like 16.99 is kind of the worst case for Ether before it breaks out, but things do change, supports break. I mean, all that stuff happens, but I'm giving you what I see today. Looks pretty solid, very constructive, if not a little sloppy. And let's see, let's do a little bit of fib work on where the C is going. So yeah, this is a little bit off here. 27.90 is ideal. 22.68 is ideal, and then it would be nice to have a run here for this C to 31.70. And then there's still back here a fourth and fifth ideally, which takes it roughly into the 4,300 region for the end of this A. So what is it? 31.70 for this 3, and then roughly 4,300. I'm going to have to do a little bit more because we get there, but looks good for that end of that A until something changes there. So pretty good return to get out of Ether as long as we can weather through the ranges patiently. GBTC, let's do Ether Bitcoin pair first. Looking at this morning, I'm going to literally change this to primary being one more low, and I'm actually going to take off this and this. So I'll fix that later. I just don't think the proportions have gotten wrong with this high 4, and I believe that this will bottom in the next low, and I'll get a target for it. I'll give you a target. The problem is I don't really know where the 2 is. I'll give you a estimated target right now. I don't feel very great about the target, but one more low is I do feel good about that, and then we'll just see if we get an impulsive reaction. So 0.058 is ideal right there for this. It'll be the 5th. I got to juggle this all around and get the 5th there because that's too high, and that is 0.058. That's the correct fib. Looks good. I shouldn't say that's the correct fib. I don't really know where the 2 is, but that looks good. Best I can tell. And the proportions of that would look right in context. But I'll jiggle all that around before I post the chart on the site after the video. GBTC, zoom out again. I don't feel great about the long-term knowing what the heck this is doing long-term, because the premium issues have really broken it. I could take this red. I'll take this red count off. But ideally, all I can say is ideally it gets to 92. That would help me understand this chart long term, but we'll see. Maybe turning to a spot ETF or whatever, something happens and it helps us get there, closes the premium further. I don't know. It really is a mess of a chart. Really a chart that I have more and more played short term, and where it is less of a mess. And we have a pretty solid one too. I am going to, by the way, adopt this red B and have to reorder the count a bit. I will get that done as well, but it looks like to me like we're set up for 38 out of all of this swing trade. Looks pretty good. Let's see. Wait. No, I think it's gonna. I think because I'm going to be, it might limit it. Sorry, it might limit it to the 35 region. Still, that's not bad. So it looks pretty good there. But I have to fix the chart because I have to because it has not given us a 2 already. It's too high to call this one of this larger third. I need to change to the ABC chart. The fibs no longer work, at least reliably so. You can make arguments like, oh, it's just premium closing and all of that. You can't really trust the fibs, whatever. I just consider that a move by sentiment, so it's still based on fibs, fib structures, Elliott wave. So can argue that until we're blue in the face. I'm going to change the count, but not a big change. I mean, we're still looking up. Support, support, and then what's more important, of course, is where support is, which is at what did I say, 14, rounded. But doesn't even want to get there right now. Ideally, we start to fall. We'll see. I'm wondering if this one just continues to range trade until Bitcoin gets caught up and gets into its 2. I don't know. I'm just proposing. Not really much to go on there, but 14 is support, and I will be buying into that region because I'm working on getting out. You know, what's interesting is I think I would get to profit once the swing trade plays out. So I may be out of GBTC ultimately, except for the Magic Bus algo, which I still love. Anyway, so that's cool. And then Bido, it was adjusted for the last dividend, so this is pretty accurate. We do ultimately want to see. I need to adjust my fibs for that, but it's like roughly keeps going down as the dividend comes, but it comes out, but it's in the 80 region. Ultimately, I got to fix that up there, and locally, ideally, gives us a 5th into 1762. Support for the 4th is 1544. Below that, I will believe it to be in the 2 with support at 14. So same thing, you can scale. I mean, I've been doing this one too, scaling in. I think you've caught my post, scaling as it goes lower, scaling out as it goes higher, building a larger position. And the swing trade should take us into, let me double check all the fibs, into, sorry, let me make sure I have all the right fibs. Make sure I know what fibs I've got on here. Yeah, so this is high. No, that's right. That's good. All right, 22.44 for the 3rd, and then ultimately 24 for this larger 3rd. Looks good. I'm just double checking myself all around here. Yes. All right. So that is that. So again, same thing. You can range trade that. One thing I want to say, I'm evaluating it very closely right now, but for those on Elliott Wave Trader, the Bido Magic Bus algo, I think, is really having problems. I don't have a way to get it to dividend adjust automatically, so I've been doing my hand, but I think it's going to mess up the entry. So it's on watch for me in terms of keeping it. I don't think the return's been that high as the GBTC Magic Bus. Of course, it's had too short of a life so far to trust that as well, but that dividend is really messing it up. I'm looking at solutions. I'm going to try coding it into TradingView to see if I can do the adjustment there. I have a very low confidence that I can save the algo, unfortunately, so it may go away. At the same time, the Bitcoin futures Magic Bus is still under testing. I haven't been posting it, but I've been tracking its data, and I can't tell you whether it's promising or not, but I will give you an update on that, or deploy it if I think it's worth deploying. I haven't been trading it, I've just been watching it. So we'll see on that. But anyway, regardless, Bido, it's an opportunity to definitely scale range. You know, one thing we haven't brought this up much on Seeking Alpha, but I want to talk about this webinar. There's been a lot of people that really don't understand dividends. You know, this thing is paying high dividends, and they seem to think it's free money. It does give you an extra benefit if you take the dividends and reinvest it after the drop, but hopefully you realize that every time a dividend is issued, the NAV drops on the fund. So it looks like it on that day of X dividend, which is the X dividend is the day that something trades without the dividend. or accept the dividend, if you will, ex-dividend. And that was what I think the 3rd, July 3rd, I think that's right. Maybe I'm wrong. At any rate, that dividend, first of all, if you buy after ex-dividend, you're getting the cheaper price, but you're not going to get the dividend. That's something that's important to know. And second, that dividend is basically paying out from the treasuries that are held in collateral for making sure the fund is not leveraged as it owns futures. They could have just done it in cash. Honestly, I think it would have been easier. But this dividend paid out is not free money. It's simply all in all, you basically, unless you reinvest the dividends, you have the same return as if you rolled Bitcoin futures. Okay, so there's been a misunderstanding. It's the same thing with a stock. I mean, people seem to think the stock dividends are free money. They really are not. They simply, the company takes in cash flow. That cash flow goes onto the balance sheet under current assets, and then it's paid out as a dividend and removed from cash flow. So basically, the stock should drop alongside the dividend release. It hardly matters if you have something like Apple that has a 1% dividend and tends to have a lot of investor interest. Basically, you know, if it's bullish on that day, they'll swallow that stock price drop. But if you have a high dividend stock, which I trade a lot of high dividend stocks that are like 10 to 14%, and they're not hot companies with very volatile stocks, that company will, that share price will tend to drop. So don't think of dividends as free money. It's simply a payout of cash flow, and is not any excess return, so to speak. Okay, so I hope everyone understands that. But I've seen a lot, especially on Elliott Trader, people not in the cryptocurrency service, but just sitting on the main room talking about how all of this money is pouring in their laps from owning BITO shares, and this really is not the case. Basically, they're performing just like Bitcoin futures, which is very close to Bitcoin performance, but I want to specify Bitcoin futures because there is a roll decay when the futures trade in Contango. Okay, so I want to make sure everyone understands that. All right, any questions? Any questions out there before I move on to the weekly charts? Let's see. I see that USDC and USDC are depegging a lot recently from USD. Do you have any thoughts about this? USDT is almost 1-to-1 with USDC when USD is less than 0.1 US dollars worth in the moment. I think it's an arbitrage opportunity, unless there's some real contagion I don't know about. They constantly depeg and then repeg. We've seen that for years. Generally, it's an arbitrage. It's not an arbitrage that I've personally engaged in because it's small money. I don't really care. But yeah, that's the only thing I think about it. I don't think much about it unless again there's contagion in the news that I'm missing. A lot of times, you know, it depegs because there's a belief about contagion that doesn't last. So anyway, is it normal? Yeah, it is very normal. We see it constantly. USDC less so than Tether. I mean, there's so much. I mean, Tether is a very opaque organization. I mean, Circle is not really. Circle has not done a great job of leaving the world with confidence in the organization. So it depegs quite a bit. USDC only does periodically, very shortly. Again, if you feel like you want that 10% free money quickly, you know, like you could just buy USDC. I mean, it you know, usually it doesn't last long, so it could be a good return. I mean, 0.9. I mean, that's pretty good arbitrage. I mean, usually it's not that far. Sometimes you've got to be really quick on it, you know. Like, I mean, I think if you want to create like a USDC USDT peg robot, it would be a little more worthwhile. That would catch it and get it on time. But I don't know, it just never has interested me too much because there's not much money there. Let's see, psychologically, how do you deal with a situation that if you scale out and take profits, price may move much higher even after you have scaled out? When price then comes down and pulls back, you start buying, you might buy much higher. So I mean, even in this question, there is a gaping hole between your attitude and my attitude. I think of cash in the account as good and an opportunity. Remember, I trade a lot of things. So if I miss one trade, you know, because I took too much profit early, do you know how many, like, I've been trading since I started learning to trade in the year 2000. Here we are 23 years later. Do you know how many times that has happened to me? and yet over time I am consistently profitable. The thing is I don't sweat over one trade. Like, I try to work every trade in a disciplined fashion, and yes, sometimes that discipline hurts me. Yes, I haven't been in like the way it's hurting me the most right now is that I'm not in minor shares. But do you think that I feel bad about that? Of course not, because I have missed many, 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 many trades in my career, and it is not the missed trades that has impacted my life. It is my discipline. It is my discipline. Again, you don't have to have the same disciplines I do. I try to teach you guys disciplines that I like, that worked for me. You guys may want to discover your own over time, but it is not that one stupid trade, missed trade, which I have thousands of those, that has impacted my life nearly as much as the financial benefit of trading in a disciplined way. So there's a few things you can do. You can say, okay, this is my scaling account, and recognize that that account is going to maybe miss some trades potentially. Again, I know where I'm going to miss the trades because I have the fib, and I gave it to you earlier. Let's keep that in mind. But you can separate your accounts out. Again, remember that if I think the chart is worth a darn, like Bitcoin and Ether, I have a pretty healthy position already. And then again, I'm using the scaling to build that core position. That core position is the position that I will have on until it's at a major top, generally 125K Bitcoin and 10,500. So one of my goals is to have that sort of, it's almost risk-free in that it's like built with profit, right? Versus money, hard-earned cash flow that I have. And so like, again, having some cash to me is a good thing. There are a lot of things to trade, and if I miss one trade, there's another. Again, don't trade like the trade you're in is the last trade of your life, right? Like, I mean, after 23 years of doing this, and I mean that better for worse, because I mean really first 10 to 15 years I was pretty terrible, very inconsistent, maybe even longer than that. I mean, I not say I didn't make money. Like, I paid, like, in the early years, like 2003, I had bought a house with gold trading money. Like, basically the down payment was made from gold trading, and it was my second house. But for example, so I did okay, but like, honestly, first 15, maybe even 18 years, I was horribly inconsistent. I really didn't get consistent until I bumped elbows with people on Elliott Wave Trader, to be honest, as a member. Didn't start to get consistent, and I'm trying to pass it on. But again, don't trade like the trade you're in is the last trade of your life, because it won't be. I mean, you can miss all. You're not going to maximize profit on thousands of trades over your lifetime. It's just reality. Like, that's part of trading. But it's not so bad to have cash accounts. So my point is, change your psychology. Like, just think of it a different way. Like, what's, if you got some profit out of it, what's to worry about, But I do think at this time, since we have a beautiful swing trade, you do want to have a core position that you're not trading. You want to be building that. It's an opportunity to build it. It really is, in Bitcoin, and down to 26K, there's like no concern with this swing trade. So that's an opportunity. So we may not get as low as I want to get as big as I want, but that's part of it. I mean, those are just the things they plan. And again, and the same thing with the miners. Do you think I feel bad about not having huge miner positions? I have a solid position in Hive because I like that one the best, but I have a very tiny position in Marathon, and I've got nothing else. I am totally okay with that. Like, I have plenty of profitable trades over the last 3 months. I don't need to have another one. Granted, like, it would be nice, right? But again, my discipline causes me to win over time, and reneging on that discipline to chase something and chase profits is completely unnecessary. And like, and the only thing I would say is like, I hope that you guys journey to have that level of peace with trading. Trading with Zen, like, I'm not a Buddhist, but like, that term, it applies in trading really well, in that, like, let it fall off you. Like, you have to learn to do that, because bringing emotions into concerning about squeezing every little dime out of every little trade You know, focus on the disciplines. Like the disciplines will get you a lot more mileage than worrying about one stupid trade. Because I will say, like, again, disciplines will not work on every trade. Like, but that's not the point. The point is to run the marathon, not the sprint. Okay? This is not a sprinter's game. This is a marathon. You're trying to make consistent return over time. And in part of that, you will have cold times, hot times, and the disciplines will weather you through the cold times so that you can run hot in the hot times. Like, and if you don't have that discipline, you will not make it, period. You know, again, remember 10% of people that endeavor to trade for a living are successful at it. And most of you guys are not trading for a living, I get that. But the same level of discipline as a trader trying to trade for a living, you should have as well, because it will just save you a ton of money. All right, so change of psychology. That's all I can say. You know, it's a long speech to answer that question, but you know, my point is that you and my psychology is actually quite different, and I'm trying to help you see that without being too preachy. All right. Any other questions before I move on? And if you need me to wax on that one a little bit longer, I can, but I'm going to move on and I can come back to it if necessary. All right. BNB. Again, pretty short-term, at least, unfortunate chart. Fairly likely to break down. I put these little arrows on the report if you guys caught it. This is the pivot between breaking down to 149 and filling in this red count. This red count should get us up to 1400. You know, again, in the backdrop we have CZ. Is CZ going to go to jail? Is the Binance exchange going to collapse? Those are all potentials, like seriously. And I raised the question: does BNB the coin lose all of its value if Binance goes away, since BNB is also the Binance smart chain and it's got a life of its own? These are questions I don't know. But you know, again, as I say, my altcoin positions are always small. If this thing starts breaking 149, I'm not sweating it. Let me put a blue line. I'm trying to be good about the blue line so you guys have the levels. Or I think I did have it and it went away or something. But you know, again, I can't answer those things, but because of that uncertainty, I keep my position small. I do that always with altcoins. The uncertainty is quite high. The reward is high if they work, and then I want the loss to be small if it doesn't. So we'll see. But it's becoming a little bit of a questionable chart for sure, but it isn't really fully questionable long term until 149 breaks. All right, so we'll see how that goes. Aave, interesting turnaround this week. Again, I prefer to pull the Band-Aid off and drop to 23, but it's potential that this ends up being a setup for this higher B at 300. Now, to be clear, B just results in another C, but it also would raise the level where that C goes, and so C may not go as low. It potentially could get a really high B and then go right back down to 47 region or a little bit lower. So it'll be interesting, but that pivot point, again, another blue line is missing. Trying to be better about that. That level, the line is 454.27 is what I get for this red to set up this potential run into the higher B. So we'll see 54, 27, 20, whatever, call it 54 to round it. It's not the cleanest 5 waves in this wave 1, but anyway, it's interesting. And I'm going to, you know, begin to scale out. I forget what my average cost is. I think it's like 80 or something right now. I will start to scale out once we're over whatever my average cost is. I'll be doing it slowly because I don't necessarily, it just seems like the chart is destined for another tumble with this, even with this higher B. So I'd want to be there with that cash ready to pick it up. And again, if it runs all the way up to 3,300, I will have a core. So I'm, again, like back to that question about psychology, I'm not worried about that. I have to deal with the probabilities. That's another answer to that question. We have to deal with the probabilities, not the certainties, because there are none. Like as I like to say, the certainty at all times is 0, but we do have to have probabilities to work with. All right, Matic, again, just long-term 10.5 is the goal, as long as it holds 43 cents. It does look set up. Why am I getting, see, I'm missing some data here. Yeah, Coinigy is not turned on. Come on, come on, come on. Yeah, all right. So it does seem to be set up for 43. This could morph into some kind of bullish pattern. It just hasn't indicated that yet. So I'm not expecting it to break upward. But if it does sustain over the 72 much longer, it's quite high already for a fourth wave. So I'll have to watch for a bullish pattern. Solana seems to have done it, so maybe this one can as well. Lido. Pretty good indication that it's still headed down to 2. I mean, this is a great example of having a tiny position because it's not bullish yet. And again, it could possibly break was it like roughly the 60 region? I think it is. I need to double check the fibs. But yeah, 66. Yeah, 66 is right. Could potentially break it. So this is a great example of having a tiny position. I mean, I do have to say, I think to myself, why am I watching a chart that's so slowly drifting in its C wave? I am tempted to kind of cut some of these positions that are in these slow downtrends so that we shorten the list on a week. The problem is if I do, then I lose track of the chart. Although this one I'll have some kind of position on to track it, but so I think about that. I may refine down the weekly list to like more timely charts versus things that are kind of dribbling like that. I mean, square block is a good example as well. So we'll see. I'll think about that this weekend and decide what I want to do. Kind of interested in pairing, but I don't want to confuse you with me not watching the chart anymore because I still think this one's potentially worthwhile once it works itself out. Let's see, Mask. Mask is another one in that category. Slowly dribbling down to 220. Here it is, still working on its third wave, so not much to get excited about. Ultimately, it needs to hold 139. RPL support is that 32 region, or it's already in this red C wave. Still looks like a pretty nice flat for this fourth, so I do expect it to hold. And it gave us a little hop this week, which could be fourth of a third or the fourth. So I am watching it to see. I don't mind a small break, but don't want it to be a sustained break. Solana, so this one is interesting. I mean, this one has really started to deliver. I think it's interesting. It was trending, and I saw somebody write, it's now officially, quote unquote, Solana summer, which is funny. So the sentiment is popping on Twitter. Again, I'm not worried about it short term. It's just, as that sentiment develops, it'll bring it into a top. I did find confluence with 47, which is within the A = C region for this B wave. In case you didn't know what the B wave is, I still, for now, expect a lower 2. It doesn't have to go that low. I will refine this C wave target once we have a top in B. But regardless, this one is timely now, as long as it holds 1473. I've got a grid on. I will probably do some larger scaling into 1473. But this one is now hot and timely, and as long as it holds over $14. So that's cool. It's good. We got a good altcoin that's trying. IMX is the next one that might be timely. We'll see how it works out. Again, it's very key that it holds 52 cents or is not bullish, but we do have a potential leading diagonal one. Not the prettiest, not the best, but as long as it holds 60 cents, which I will add a blue line, this wave 2 can hold. Looks to me like right now, short term, it's still working on a lower A wave, even though I'd have liked the A wave to bottom. It looks like it's working on a lower one right now. And we'll see where that B shows up. But so we'll see if that one gets as timely looking. CFX, again, I am not trading this one, but I'm holding it here in case anyone is trading it. It should go to 9 cents, which is the A = C from this B wave. But again, I'm kicked off KuCoin, so I can't do anything with it personally. BAX is the same one. It is right on the line. So again, I stand ready to delete this one off the weekly report. If you are trading this, it's a good place to be aggressive. You can give it a little bit of room. Again, why is it good to be aggressive here? Because it's close to breaking, and that's where your risk is the lowest. But you've got to keep it on a short leash here and sustaining below, what is it? 0.0023, sustaining below that. You can give it a little bit of room, but sustaining below that means it is broken. SQ block, again, this one is that lingering, slow, meandering, boring chart. It is potential. I'm watching to see if this holds a higher low now. Holds a higher low. My problem is that it's probably just resetting this 4, meaning this 4 ends up here. It really needs a 5th wave out of this before I can trust the bottom. It's possible that's 5 waves, but I just don't see it as reliable. So it'll put me in a state of having watching for a bottom, but not believing it. And we'll see how that goes. Coin. I can kind of call that a 5th wave. I would prefer to call that a higher B. It's kind of in between the two. If it continues higher into the 84 region, then I will start to prefer the 5 waves. I will think I missed taking more profit on this on Friday, but I will on Monday if it goes higher. But I will be adding into 55 region, roughly is what it looks like for this 2. And then if it breaks down 55, I'll be adding down to 38. And then I'm that in the alternate. Well, it's mainly wave 2 is the primary, but it's coming to a point where it's reasonable for it to hold this red count. So I'll basically scale through and have a stop below 38. At least I'll cut down to like a tracking position. So I like this one, kind of. I mean, it's still speculative since it's never had a lasting uptrend in its life because it's a recent IPO, so to speak. But it's one of the more interesting equities to me. Marathon, really exceedingly sloppy here. And again, like my discipline is not to overtrade sloppy charts, so that's why I'm not in this, but it certainly is grinding upward. I have given up on, so I've given up on looking for a lower low for now, but my eyes are watching for it because this is overlapping an awful lot, so it may start to trap people, especially if Bitcoin falls into its wave 2, right? Like it's just going to leave the chart like really completely sloppy. So just be careful with it. I have a small position, and I would just be buying if it starts to drop out. I would just basically be gridding it, but I'm not going to add to it, trying to chase up in here. Let's see, good. The nominal target be 24. I mean, the problem is I don't have a really reliable support other than this 2 breaking. If this 2 breaks, then I've got a higher B wave top, which was an alternate before, but I don't have it on the chart now, but it still could do it for sure. But at any rate, ideally, at least gets to 31 by the time this is done, unless it does start to take a downward path. But again, to me, a downward path at this point in time, I'm just going to be gridding it, giving space between my buys to have a lot of cash to buy lower. So I would not, if you're heavy in it, you're in a very different situation from me. You may be wanting to trade it differently. I honestly think it's wise to take some profit off of it because we've got this Bitcoin wave 2 hanging over its head. High, this one I am pretty large into it, but I sold some covered calls on it. I will be scaling into this 4, which is the first support at 4. That's quite a big, I mean, that's like 20% down to get to first support. So again, that's kind of the volatility of this asset class. But I sense over last week I took some profit, sold a covered call. I'm not going to put any puts on. It's still too small a position for me to care that much about. But anyway, so $4 is support for that, and it should eventually get its way up to 789. Again, this is potentially a major wave 2 top, unless it drops in a B and C. Again, wave 2 top because it has 5 down off the 2021 high. After that top itself was a 3-wave top. So it is really not a long-term bullish chart yet. I mean, it could change, but I am not clear of the means by which it changes. All right, so that's the weekly charts. Any questions on those before I go move on to the requests? Yes, no, maybe so. Let's see. Sorry, long question. There's a lot of talk about a Bitcoin ETF being approved as super bullish. If I remember correctly, when futures just kicked back in 2017, marked the top, and they used futures GBTC to short BTC into the ground. What are your thoughts on a Bitcoin ETF? really those count puts as in your count puts us in a bull market. And while crypto's correlation with legacy markets ebbs and flow, if Zach Mann's SPX bear thesis is correct, it seems like that would put me a lot of pressure on risk assets, maybe an ETF. So again, like I'm going to look level by level. Yes, in past, I mean, it wasn't even just Bitcoin when the GLD gold ETF came out. It was the same thing happened to gold. I see, but the problem is we have few data points. Like the problem is we have a lot of recency biasing going on. Like, you're looking at the Bitcoin futures come out and you say, okay, Bitcoin got bearish. Okay, therefore the ETF, that isn't enough data points, just isn't. It is reasonable that institutions use moments like that and the resultant liquidity to help them get out of very large positions. I can't make the argument that they shorted it. That's different from using liquidity to remove large positions from the book. Okay, very big difference. It is reasonable that they do that. I don't think it's a reasonable assumption. GBT is another matter because shorting it was a giant arbitrage. It was free money, basically free money. Not shorting it, but shorting Bitcoin and then selling GBT shares at a premium. That was free money. So so in this situation, again, level by level, like if levels start breaking, I'm bearish. But as long as we're over levels, there's no reason to be. I mean, of late, Bitcoin has not at all been tied to SPX. The correlation has been ultra low intraday, at least from my observing. Again, I stare at SPX and I trade it alongside Bitcoin, and it has not been correlated. Does it go to correlation in a big, liquidity crisis within the stock market? Sure, it could. It's definitely highly likely. I can personally see plausible structures in the SPX where it breaks to a new all-time high and yet is still in a bear market because it's a B wave high. I can see that in the chart. So I'm not going to follow phantoms. Like Zach has a bearish count. I think Avi's pretty bearish too. Has a bearish count, although both looking higher. Jason has a similar view. Please don't ask him to post his SPX view because we don't do that. But he posts it in the main market room as well as Fit Pinball. I think he's in Pinball as well. I think that's right. But anyway, so my view is there's a potential that the SPX could do a big B wave still. And again, same thing with SPX until levels break. It's been bullish. Like I'm not saying we're in a bull market. I'm just saying that until levels break, it's a bull market. Like or it's bullish. So like it's not even worthwhile talking about unless you're a long-term investor, you may want to cut something down. But see, like I'm a long-term investor and a swing trader, and on a swing basis, I'm long the SPX essentially. I think I've got puts into next week, and then after that, I'm building a call position. So and then but my SPY position, QQQs, and all of that long-term stuff has been getting cut down. So you can have a thesis of bearishness, but got to be careful about the short term because right now the short term is up. So to me, it's not even worth talking about until something starts to break and then see if everything starts to break. It just isn't worth it. Like now that could be different from how much like exposure you want to put into a sector and all of that. That's different. That's a different matter. That's something you have to work out. But that's kind of my take. Like, I don't know, like, again, I don't like trading phantoms. Like, oh, this is gonna be bearish. And so like I've seen, think about all the analysts like Peter Schiff that talk like that. Oh, the US is gonna break and the dollar's gonna crash and gold's gonna go flying high, and they talk about it for years because it's, yeah, and I recognize that everything that Peter Schiff says is a possibility, but I don't want to trade possibilities. I want to trade probabilities. Hopefully the difference is clear. Like it's kind of crazy to be worrying about these kind of phantoms in trading when the chart is in front of us, and right now the chart is bullish. Like that's basically the way I work, and I will react when the situation changes. Again, and I'm trading like on a swing basis, right? Like I'm not talking about long term, short term. I'm just talking about swing basis. Right now, everything is up, including SPX. All right, so can you explain how institutions buy without moving price? Again, it's very simple. You can buy without limiting. You like if you had $1 million in your pocket, you can buy without moving price. How? A limit order. Just think about it. If you so again, like we can do it like we can do it this way. Let's see. Let me see if I can pull up like a quick document. Let me just do a random just to spell it out. All right, so let's say you have, it's very quite simple. Like this is just market mechanics. So let's say I don't want to do this. I want to do a document, a PowerPoint. Okay, so you have a, let's see, Bitcoin, let's say Bitcoin's at 30K. So this is the quote. This is the market price, right? This is what is quoted as the value of Bitcoin. It really is not a value at all. It's not a valid, whoops. It's not a valid price. The valid price is where people are buying and selling, right? That's the bid and ask. So you have, let's say you have, I mean, these are like really illiquid prices. I'm just being, so you have ask, okay? And let's just call this 29K. Again, that's ridiculous liquidity, right? But just trying to be simple. Okay, so this quote is nonsense because this is just the last trade, right? It's just the last market value. But basically you have sellers here and you have buyers here. If you come in with a market order in this situation, you're gonna buy at 31 and this quote becomes 31, right? So you move the price, right? If you're gonna buy at the limit at 29, or let's say you moved the bids 2,500, you didn't move the price because you didn't basically take liquidity. A taker is the term for somebody that takes the liquidity, takes the ask, and they move the price. A maker, a liquidity maker, is someone that puts a limit order and provides a bid. Okay, at least in buying and selling, you know, the maker, the liquidity maker puts a sell at, you know, basically a sell price at ask, but they don't move the price until they sell at the bid. Okay, so we call it the spread crosser, or the one that crosses the spread. Those are the ones that move price. So I'm just saying institutions simply live in the limit order, and they often have algos, right, that will move their limit order tighter with the market. And the point is that their big bids do not move price. There was a really great article put out by Coinbase. Michael Saylor was using Coinbase to fill in their Bitcoin purchases. They probably still do. And Coinbase released an entire article about their process using algos to use a limit. So basically, you know, Saylor says, I'm buying this much Bitcoin, right? The market gets super excited and bullish, right? Everyone on Twitter is excited and they expect Bitcoin to fly, right? But it doesn't. Well, what happened is that basically Coinbase just used a limit algo to get Saylor in or MicroStrategy in without moving the market. Essentially, that's it. Now, again, when you have some excitement, like, I mean, one of the reasons why markets top is because institutions use all of that excitement, liquidity, you know, people crossing spreads to get out of their large position because there's so much liquidity. If you look at basically Bitcoin at, let's go to a daily chart, look at where the tops are, and you can see this, you know, oh, that's at the bottom, but you can see there's usually some spikes in volume, right? This one doesn't show it as pronounced, but man, in 2017, you see the same thing on bottoms too, but when you look at it in 2017, right, there's a lot of liquidity there for institutions to get out of their positions. You see a little bit here in 2019. So you're not gonna see it on every chart. So this one you see it on the bottom. Actually, this point has a lot of liquidity going on, so there's a lot of selling there. So you know, so basically institutions need that liquidity. If they have a giant position, they need to get out. They see that peak in volume. Just the mere act of looking at that peak in volume is going to cause them to take some profit because there is that money there to be had. I mean, it's like it's a safe place for them to get out simply by putting pretty heavy sell walls at an ask price, and then all the FOMO people will take it, basically. Okay, hopefully that makes sense. Hopefully, I mean, I've kind of mucked that up linguistically, but let me know if that's clear. You do not move price if you're doing a limit order. Same thing with my grid trading, right? My grid trading is all a limit order. I'm not moving the price. Now they're not heavy buys, so I'm not going to move the price anyway. But anytime you're on a limit, you effectively are not moving the quote up or down, basically. So I'm just curious about your personal take. I'll actually trading level by level for the time being. Yeah. Again, like I think it's better to say I really hate delving into what's the word, like hypotheticals. Like when you're talking about the ETF and what it's going to do to Bitcoin, or what the SPX is going to do with Bitcoin, it's hypotheticals. Like there really is very little data points to go on, and so I can't talk about it from. There's a big difference between hypothetical and probabilities. Like I can't even say that the probability is high that Bitcoin tops in those, because I don't have much data points to say that it will. Yes, in the past there has been an ETF and things drop, but I would also argue that at the time of those drops, a top was already, like a lot of times ETFs come out near tops where the market is ready to eat that ETF up, right? Like what's the best way to sell an ETF? Sell at a market top, because the market is demanding it, right? So we may see something like what if we saw this? So like BlackRock gets its approval for its ETF, but we find out they're not ready and they don't release it until Bitcoin is at 125. Is the argument that we topped because of the ETF, or is the argument from an Elliott wave perspective that we topped because we had reached a fifth wave target, right? Like I see that all the time. Like, you just have an event like that and then everyone wants to blame the event, but actually we were looking for a top all along. Like, so anyway, we'll have to see how that works out. But again, like trying to get an answer here and now is pretty much dealing in hypotheticals. So anyway, all right. Any other questions? Hopefully this is clear, hopefully now you understand market mechanics and why institutions don't have to move price. Sometimes they do, but they don't have to if they don't want to. All right, so let's hit request, FET, three-wave top 2021, three-wave top now locally, and one more wave is 5 down. Is this bearish? Hell yeah. It's terrible. So that would be a good start. Get a 5 down below support here would be a great start to the third wave. So no change. I had this chart forever like that. I didn't do any changes, but except for adding this fifth wave. Bearish as hell. So again, if you can short it, you have the power to short it. There'd be a wave 1, 2 set up here, and you short it for the third, but I really see no reason to be long this chart. It's a piece of crap. All right, it might surprise, breakout over this level will be the first thing to surprise me. Doesn't give an easy setup because that's 3 waves, so maybe some diagonal in a C wave, ABC. That would be the alternate, but right now I don't see any sign of that. And there would be nothing to miss here because that would be a diagonal given the top 10 3 waves here. So a piece of junk. All right, HUTs. Reached all of my targets for all of this. Can it keep going? Absolutely. There's no sign of a top, but it has reached all my targets for this third. I will probably scale into the 4. I really don't like trading diagonals. This is a sloppy, hellish mess. But I would be trading for. It would be really wise to take profit. I don't know if I like this count at all because this looks like 2 extended fifth. It may be more of a 3B and then C. I'll have to look at that closer, but regardless, no matter how I shake it, it is overextended in this third. So I'm not saying you have to sell all of your HUT, but you may want to consider, again, I'm not making a recommendation, I'm just saying consider maybe taking some profit. And I will be buying if it drops into this fourth for sure, because I do expect a fifth. The problem with this one is it's a nasty diagonal. It doesn't give me good levels, so I will not get a big position. Again, this is back to my discipline, right? Back to my disciplines that we talked about earlier. I don't care that I'm missing this. This is a chart that gives terrible probabilities and doesn't give very precise levels. And yeah, it overextends when I don't expect it to. But it looks to me like we got some kind of diagonal. So somewhere around 281 to slightly outside the channel, broken if it's below 196. That would be a giant B wave top, and then we might find support down here. So that gives me an opportunity to kind of widen my cash position and scale. And again, I want to take profit from this safely, so I'm not going to be chasing the sucker. I'm going to be trading it on my own terms. And that's another example, like, do you want to trade on your own terms, or do you want the market to tell you how to trade, meaning by duress? Like, you don't want to be trading by duress. That's another reason that I don't listen to FOMO. I want to trade on my own terms. I want to be in control of my own trading. All right, Link, really not exciting. Nothing exciting about Link. So here's the problem. Remember, we've had a forever range, right? And we have a potential 5 waves, which would preclude this being wave 4. So we can watch the 786 retrace at 527 to see if this wave 2 holds. You could by chance scale into this. My problem with this is it looks to me like another C wave. Yes, the 4 out here before it finally flushes and the range continues. So you'd have to decide you want to trade it. I'm not excited about this until it shows a real breakout setup, and I don't know if it will. Again, I think this chart may be dying, but because it should have been in the bull market already. It has no time to hit. But if I see this setup, and I don't know exactly where it will show, I don't know if this 5 will extend, or we're a long ways from the setup, but if I see 5 waves here and it proves not to be this wave 4, and does fill in this wave 2, then I think it's interesting. Not at all interesting down here. The other, again, the thing is, why do I say that this may be a C wave? Because this is a 3-wave bottom. So A, C, what is it? A, B, C, 5. I mean, that's the problem with this. It didn't never finish. So, you don't have a 5-wave sort of termination, if you will. So that's my issue with this. And so I don't want to have any part in this. But if it does fill in, let me make this red. If it does fill in this level of wave 2, this degree out here, then it gets kind of interesting. But really no interest down here at all. It's just going to get, like, unless you want to, again, if you have a mindset of you're enjoying range trading, which I don't mind doing, but I'd rather range trade to build a swing trade versus just range trade. This one is not building a swing trade yet. GMX, as I've said, we could get a running flat, but it's not giving me any impulsive rallies, so I expect this wave 2 to go lower. We can do support for this wave 2. I mean, it's a long way down, and there's no sign of let up yet. This is not exciting. It's not impulsive. I mean, maybe it gives a diagonal, but I'll let that figure itself out. I have no interest in hopping on. I mean, support is way down here, so if you were to hop on here, I can't suggest to you that you won't visit $15. And then the question is, $15, does it hold? So, I mean, it's not a target. I'm just saying that is support as long as there is no impulsive rally and there's no sign of it. And I have no reason to believe this count. Again, a count is just a count. Like, you can't just trade a count. You got to trade the levels that it reveals and trade when it starts to work and all of that good stuff. You don't want to just buy senselessly moon counts hoping that one day you make it rich. That just does not work. Yes, when I was new to crypto, I used to do that, and then I realized most of these altcoins break. So not exciting there. So just wait on that, at least in my view. APLD, again, I mean, this is a great example of a sloppy, nasty chart that has been working for me. Again, I emphasize working for me for now. I don't know if it will continue to, and I've been trading it very small with all of my discipline. I mean, it's always, again, back to the miners. I could have traded all the miners small, but like, there's only so many of these trades that work. Then this one's been beautiful, but I mean, I don't have much to add. I mean, we're still waiting for 4 to work itself out. Based on looking at this close in, I don't think we have a setup for 5 yet. Looks like it should go lower. Support, yes, you get those blue lines on there. Support is 540 again. So there's no change here. I don't have much to add. I mean, if there's any specific questions, give it to me. But I don't see anything to add from recent posts. It's just range bound until this 4 lets loose. And if it breaks 540, then it's in the B. And then the last one, MSTR, and then someone wants a trade. So the question is, do you want a trade that I would take, or one that you could take, because I would not take a trade on MSTR personally. It may be following this diagonal. The diagonal should get to 708. I mean, the reason I don't want to trade this is because it's a pretty expensive stock. So like the only way to trade a diagonal to me is gridding, because again, none of the levels are very worthwhile. If you wanted to take an aggressive swing trade, we've got 287 here support. I don't trust this wave one because it looks like 3 waves. So it may just keep grinding, or it may be 3 waves and then worse, maybe puts in a lower B down here. Again, the probabilities are not, it's a really low quality chart with nasty long term, nasty short term. Again, and the skew is not fabulous. I mean, we're talking about take a swing trade from 287 to 583, you get maybe 100% return, but are the probabilities, are the risk for that trade, are they good? You know, you tell me. If you have an account, like again, like maybe you're made of money, like you got $100,000, that's about what it would take for me to want to grid this. I would want $100,000 in the bank that I don't have in other trades. I have $100,000 in the bank, but not undevoted to trades. That's the only way you can get this to be interesting to me, because again, it's in a diagonal. So to me, the only way to trade a diagonal, well, the only reason I trade a diagonal is gridding, and then if it has a bullish context outside the diagonal, and this really doesn't. It's just a flat I mean, this really is an ABC, just isn't really a 4. So again, I'm trying to talk you off this chart, but you know, I know that you have been requesting this over and over, Jai. So it's up to you. I mean, there's only aggressive trade I can see you can have 287, but the best you're going to get is, let me see if I can get you any more skew here. Okay, you might get 636 out of it. Could be somewhere between 552 and 636. So again, to me, it's not exciting to me for the low quality. Again, it's not just what you make, but the risk you take to make it. And to me, it just isn't worth it. Like the skew is not there. The quality of the chart is not there. The probabilities go with the quality of the chart. And then the gridding, you know, it's an expensive stock. So like I could do 1 share at a time at each grid. You know, I could do that. Or if you have an account like Public, where you can do partial shares, like public.com, which I trade NFTs on there occasionally. You could grid it there. Could be interesting, but yeah, I mean, I don't know what to say. It's a pretty nasty chart. So I don't know. If any questions, let me know. I put enough effort trying to talk people down off MSTR, but it always comes back. See, any more questions? That is all of the requests. Going once, going twice. All right, I think we're done, guys. All right, let me get the recordings up, charts up. If you got requests, throw them in the request process or the channel on eSeeing Alpha. I'm happy to do it. And have a good weekend. Talk to you guys later.